Hey guys, please enjoy this video. I worked really hard on it. I hope you have a great time watching this one.
Investing in bonds and real estate during inflation. Investing in bonds can be an effective hedge against inflation and volatility. Inflation and interest rate increases have historically accompanied economic slowdowns. While inflation can be unpleasant, it is often necessary and expected. Choosing the right investment strategy during inflation will depend on your financial situation and your future goals. Disclaimer: the information provided here is intended for educational purposes only and is not intended to be a substitute for financial advice. You should seek the advice of independent professional advisors when making investment decisions. Stocks. Inflation is a major issue that affects stock markets around the world. The escalating price level has depressed profit margins and stunted growth. Inflationary pressures also have a negative impact on investor sentiment. Inflationary pressures lead central banks to tighten policy, which tends to push markets into a risk-off mode. Despite this, there are still several stocks to consider buying during times of inflation. One of the best stocks to buy during inflation is energy. This sector is expected to beat inflation 71% of the time and can offer returns of 9% per year. If you're more concerned about the economy's broader outlook, you might want to focus on other investments like REITs and small caps. However, if inflation is expected to fall, you should stay invested in stocks. Remember that past performance does not guarantee future returns. When the Federal Reserve changes interest rates, it sends ripple effects throughout the economy. The recent increase in interest rates is intended to curb inflation, but will affect stocks, bonds, and other investments. Remember that the Federal Reserve has a triple mandate: maximum employment, stable prices, and moderate long-term interest rates. Rising inflation has been a talking point for a while. Consumer price inflation has been above 7% for 3 straight months, and several indicators point to a peak. Moreover, the Russian invasion of Ukraine has added to the inflationary pressures. This has led to an increase in volatility across the globe. Tips: if you are worried about inflation, TIPS can be a good investment. However, TIPS carry high break-even rates and may underperform traditional treasuries. As with any investment, it's important to understand the risks and potential rewards before investing. Here are a few things to look for. When purchasing TIPS, consider the time horizon. The TIPS can be held for a short time or a longer time. TIPS are traded on exchanges and can be bought individually or in an exchange-traded fund. As with any investment, past performance is no guarantee of future results. In fact, the Bloomberg U.S. TIPS Index delivered a 6.8% return in the year ending November 30th, 2021. TIPS are generally tax-exempt for state and local taxes. However, the inflation adjustment is treated as taxable income by the IRS. Investors who hold TIPS in a tax-deferred retirement account may want to consult with a tax professional. TIPS are generally not a good choice for investors who want to protect their money from inflation. TIPS can be purchased directly from the bank or a broker. However, these investments typically pay lower interest rates than other securities. This makes them not an ideal choice for investors looking for income. However, they can protect your principal if the inflation rate increases significantly. TIPS can also be purchased in individual bonds and are a good planning tool. Since TIPS don't have a predetermined maturity date, the maturity amount can fluctuate over time. Real estate. Real estate has a history of doing well during periods of higher inflation. This is because prices increase as the amount of money in circulation increases. This makes real estate investments a great place to invest. You can buy real estate through mutual funds or REITs. However, it is important to remember that the post-pandemic era may change the response of real estate to inflation. While the demand for residential and commercial real estate may be reduced, prices generally go up during inflationary periods. While inflation can be detrimental to consumers, it can also be beneficial to investors. This is because it creates low supply, which can lead to high demand. You can then raise your selling price and get offers well above your asking price. Although you should always try to sell your property during an inflationary period, it can be difficult to buy during this period. Therefore, it is essential to know what to do during this time. Investing in real estate during an inflationary period will provide you with a great chance to profit from a rising market. Inflation will drive up the cost of construction and make rents rise. Your investment will likely remain flat during these times and serve as a much better hedge against inflation than a savings account. Inflation is a natural process that occurs when demand increases. Whether that is a stock market rally or a housing bubble, the inflation of home values will affect the rent you can charge. Real estate investors must study their cash flows to make sure the cash they generate every month exceeds their monthly expenses. As a result, higher home values require larger mortgages, which will raise monthly mortgage payments. Commodities. Rising inflation is one of the best times to buy commodities. While prices will fluctuate, historically these investments have outperformed other investments in a rising inflation inflation environment. Last year, energy, precious metals, and industrial metals led the way in return increases. According to Saxo Bank's head of equity strategy, Peter Garnery, these commodities are essential inflation investments. However, there are a few things to keep in mind before buying commodities. One of them is the relationship between the US dollar and commodity prices. When the US dollar is strong, commodities tend to fall. This is because the strength of the dollar impacts commodity prices on the domestic and international markets. As a result, a strong US dollar tends to affect commodity prices, which in turn influences inflation. As we all know, past performance does not guarantee future performance, and commodities prices can fluctuate dramatically. Oil stocks, for example, may react differently if the world shifts to electric vehicles or cleaner energy. Likewise, an increase in oil prices may not have the same inflationary impact in the future as it did in the past. As a result, investors should take their time and make their own research. In addition to rising prices, consumer companies are also facing inflationary cost pressures. Wages and shipping costs have risen in recent years. Meanwhile, a July 2021 Producer Price Index report indicated that input prices had increased by 9.6% over the past year. While these increases may be temporary, they can affect margins and result in lower profits for companies. Rental property. If you're planning to buy rental property, you need to be aware of the effects of inflation. During an inflationary period, rental rates tend to rise because people are more willing to pay higher rates. Inflationary conditions can provide you with a lot of opportunities if you're an investor. Inflation affects many different types of goods and services. It affects the demand for housing and the supply of goods. This makes real estate an excellent way to hedge against the effects of inflation. While it may be tempting to increase your rents, it would be wiser to raise your rents in line with inflation instead of exceeding it. Consider Ripple Crypto. Ripple is a cryptocurrency that is designed to provide fast and low-cost global payments. It uses blockchain technology to facilitate cross-border transactions. The cryptocurrency was created by San Francisco-based fintech company Ripple Labs, Inc., which specializes in developing the technology behind cryptocurrencies such as Bitcoin, Stellar, and more. The company has offices in New York City, London, and Luxembourg. Ripple is a cryptocurrency, but it's not the same as Bitcoin. Bitcoin and other cryptocurrencies are decentralized networks that use blockchain technology to facilitate transactions, while Ripple is a centralized network that uses its own currency to facilitate transactions. You can think of Ripple as an alternative to SWIFT, which is used by banks around the world for international payments. Ripple has been working with banks and other financial institutions for several years to develop a network that allows for faster, more efficient transactions. The company's technology allows both individuals and businesses to send money across borders quickly and easily without having to rely on traditional banking institutions like SWIFT. Ripple's technology also allows its users to exchange different currencies on the same network, which is something that SWIFT doesn't offer. This makes it easier for individuals and businesses who are looking to invest in other markets or countries. What is Ripple? Ripple is a blockchain-based payment network that offers real-time international payments. The company was founded in 2012 and has offices in San Francisco, New York City, and Luxembourg. It's backed by more than 100 financial institutions around the world, including Standard Chartered, Santander Bank, and Bank of America Merrill Lynch. Ripple's technology is being used by financial institutions to make cross-border payments faster, more efficient, and less expensive. The company offers several products, including Xcurrent, a blockchain-based platform that allows banks to instantly settle cross-border payments with end-to-end tracking. XRapid, which uses XRP cryptocurrency to offer on-demand liquidity for payment providers. In May 2018, Ripple announced the expansion of its partnership with MoneyGram to deliver faster and cheaper cross-border payments for customers. The company also announced a pilot project with Santander Bank in October 2018 to provide foreign exchange services on its blockchain platform. XVia, an API interface that enables businesses to send payments across various networks. As the money supply increases, consumers' demand for goods and services increases. The more expensive production process means that the prices of products and services increase. For example, the cost of building a home goes up because supplies and wages are rising. Consequently, investors have been having a hard time finding reasonable rental homes. As a result, they have had difficulty expanding their rental businesses. Fortunately, inflation can also benefit property owners. During high inflation, the value of a home increases, and because there is low supply, it may even rise faster than the asking price. Moreover, it is also possible to use your property as collateral for a loan. However, you should still be aware of the risks of high inflation, as it could lead to a recession or higher mortgage payments. Therefore, it is imperative to plan ahead.